Well, hello everyone. My name is Dr. Karl Kreder, and I am the Director of Energy at Consensus, and I am a co-founder of Grid Plus. And Grid Plus is going to be the world's first blockchain-based retail electricity provider or utility. And what that means is that starting next year in Texas, you will be able to buy, sell, and settle your electricity in real time using a blockchain. So before I get into Grid Plus, I just want to talk about Consensus for a moment to kind of understand how Grid Plus and Consensus are related. And so Consensus is arguably the world's largest blockchain consulting company at the moment. We have 400 employees. Our headquarters are in Brooklyn. And the goal of Consensus is to assemble the tools needed to build and scale the emerging economic, social, and political operating systems for the planet. And the way that we do that is we have three sort of different business areas. One of them is infrastructure development. So we're mostly an Ethereum development shop. So we develop applications on the Ethereum blockchain. So an example of our infrastructure are developer tools. Truffle, if you're familiar, has over 150,000 downloads. It's the IDE for developing on Ethereum. We also have something called Infura. Infura is essentially a RESTful API. It has over 1 billion requests per day that allows applications to very easily and simply access data on the Ethereum blockchain. We also do product development, and product development is where Consensus starts, incubates, and then spins out a company that makes sense to stand alone as a separate entity. And so that's where Grid Plus sits. An example of other spokes that have been spun out of Consensus to date are Gnosis, which is a prediction market, or AirSwap, which is a distributed exchange. And then we also do enterprise consulting. So enterprise consulting, Consensus is a founding member of the Enterprise Ethereum Alliance. There's over 200 members. Most of the Fortune 500s are included in that list. And we also do these enterprise consulting projects. So a company will come to us, they'll have an application they think that blockchain applies to, and they'll have us be the technical developers for sort of a proof of concept. So given all of that, why are we here? Why are we talking about energy today? And one of the reasons that we're talking about energy today is that climate change is threatening mankind, and we collectively must develop renewable energy systems to supplant the current carbon-based ones that we have. And renewables have actually been doing a pretty good job of this. On a cost basis, renewables are actually competitive with, if not more competitive than, thermal-based power generation. Now, even though they're economically competitive, they pose a series of challenges to being integrated into the electrical grid at scale. And one of these challenges is that they're intermittent generators. So they don't produce all the time, and they don't produce in a predictable way. So if we look at, say, California, this is a curve that's generated in California, and it breaks out the solar production, it breaks out the wind production, and it breaks out what we call base loaders, which are everybody else. So your coal-fired power plants, your nuclear power plants. And what we can see is that with the solar production, it peaks in midday, and the base loaders have to respond pretty dramatically in the morning and in the afternoon to sort of make up for that solar production coming in and falling off. What this ultimately means for the electrical grid and for this renewable future that we want to build is that there's a limited amount of renewables that we can put on the grid without creating problems for the reliability and durability of the system because of these costs that we're creating for these baseload producers and because of the fact that we have this intermittent production. So what do we do about it? One thing that we do about it is something called the transactive grid. And the transactive grid is this buzzword that's actually thrown around in utility circles, and it's been around for maybe 6-7 years. And basically, it's the confluence of having what we call distributed energy resources, so solar and batteries kind of at the edges in residential homes, and marrying that with IoT such that you can control those devices in an intelligent and responsive way to minimize the impact that those renewable intermittent generating sources have on the other actors in the electricity system. So where does blockchain play a role in this? If we have this system that we're building and that will ultimately move towards from just strictly an economic standpoint of going from coal-based or carbon-based generation to renewable distributed generation, And we can then control these renewable assets and manage them in a technological way using this idea of IoT. We also need then to have a distributed financial settlement system. So if I put a battery into my home, I need a mechanism to be able to monetize that resource and to accurately remunerate me for providing that resource to the grid. And so that's where blockchain plays a role. So the energy development history at Consensus. Has anyone here heard of the Brooklyn microgrid? A couple guys. Most of you aren't from the energy world, I guess. But the Brooklyn microgrid was the first ever proof of concept demonstration of trading electricity and using an Ethereum blockchain to make settlement. And so that was done in 2015. The work on the Brooklyn microgrid actually started prior to the launch of the public Ethereum chain. So we've been working on this stuff for more than 2.5 years. We've also did a project with a company called Innogy, which is Germany's largest electrical utility. And that project was called Cotricity, and it was similar to the Brooklyn microgrid, but it basically used the Ethereum blockchain as a mechanism of financial settlement between prosumers and local businesses. And then more recently, we've have a couple engagements with some Fortune 500 companies where we're using Ethereum. The most interesting one is where we're networking together a swarm of smart batteries. And we've made what we call an autonomous agent. So the autonomous agent sits on that battery, is exposed to market pricing, buys, sells, and trades that energy in real time, settles on the blockchain, and it does so in a way that helps the entire system while also making that asset money. So we've done at least 4 projects for some pretty large companies in North America and Europe. What have we learned from these things? Well, there's a number of opportunities that we've identified, but the biggest takeaway, beyond sort of the technological takeaway of can we apply Ethereum or blockchain to electricity markets, the answer to that being yes, is can we actually scale these proof of concepts that we've done? And the answer there is no. And the reason it's no is because the infrastructure, not from a blockchain standpoint, doesn't exist, but the infrastructure from an electrical grid standpoint doesn't exist. So it's not that we can't do enough transactions per second on Ethereum, but rather we don't have enough locations with high enough penetration of solar batteries to be able to effectively scale these ideas, having this transactive layer of blockchain on top of the electricity market to actually go to scale. So what can we do? And what we identified is that we can be a retail electricity provider, or what you guys might know as a utility, in a deregulated market. So there's a significant amount of inefficiency, which I'll discuss in a moment, associated with the electricity supply chain. And we can use blockchain with the existing infrastructure, with the existing regulations, to make that supply chain more efficient. So who knows the difference between a regulated and deregulated market? A few people. So basically, in a regulated market, you have a government-sanctioned monopoly. So the generation of power, the transmission of power, the distribution of power, and the sale of power all happens in this vertically integrated system, usually by one company, and the government essentially regulates that company. In a deregulated market, you have segmentation of the supply chain such that it becomes competitive. So generation is competitive, retailing is competitive, while the transmission and distribution system is still non-competitive. And so this is kind of breaking out the 4 main components of that supply chain. So you have generation, transmission, distribution, you have your customer here, and you have your retailer. So the generator is the one making the power. Transmission is moving electricity over long distances at high voltages. Distribution is low voltage, short distances. And then you have this entity here, which is the retail electricity provider. So that's essentially what we're building in Texas, and it's going to be called Grid Plus. So we'll buy the energy from the generation company, sell the energy to the consumer, and pay the distribution system for transmitting that energy. Now, your regular reps in Texas charge you anywhere from 80 to 100% markup for providing the service of administration and billing, and there's also some financial hedging, but they don't actually provide you a lot of value add. And what do they actually spend their money on? So if we look at the cost of electricity being what they can procure electricity out of the wholesale markets for, plus the distribution costs that they have to pay, in Texas, that could be about, say, 6 cents. Now, if we look at what they charge, the average price is around 11. So where's that 5 cents going? If we look at how that breaks down, about 25% of that price they're charging you over their cost or their margin goes to amortizing bad debts across their customer base. So some percentage of their ratepayers, say 4 to 5%, will end up not making payment on electricity use. And so they have to cover that cost over the other ratepayers. So about 25% of it, their margin is that. About 25% goes to administrative costs, and about half goes to marketing costs. So what we're proposing is that we can do electricity sales and payments in real time. And in doing that, we can eliminate all of that bad debt cost. We also can eliminate about half of the administrative costs due to efficiencies and cost reductions associated with hedging, as well as using traditional financial systems. So we can get about a 35% reduction in our cost structure relative to their cost structure. If we have a cost competitive structural advantage, that will then synergistically affect our marketing costs, because instead of competing on a non-differentiated basis, we then can compete on price. So overall, we expect that we can lower the cost of retail electricity by about 40%. But there are a number of challenges to actually doing this and to taking this to scale with consumers that don't necessarily know anything about blockchain and aren't technically adept. So we need to be able to build a system architecture that allows consumers to naively but securely use cryptocurrencies. There has to be a seamless customer experience, and you have to be able to facilitate fast and cheap microtransactions. So this is kind of a diagram of our proposed system. It looks very complicated, and it's one of the most sort of complicated implementations of the system. But the point that I want to make here is to start out as a Grid Plus customer. All you need is what we call our smart energy agent, a Wi-Fi hub, and a smart meter, and a smartphone app. So 3 things. In Texas, all customers have a smart meter. So to actually start, and most customers obviously are going to have a smartphone, and most customers these days will also have Wi-Fi. So to start as a Grid Plus customer, the only thing you need to add to the system is our smart energy agent. Now, and then over time, obviously, you can add other things that you can then take advantage of, like a Nest thermostat, a battery or inverter, and solar panels. So what does the smart energy agent actually do? It allows the customer to make smart decisions on the customer's behalf about how to buy, sell electricity. And it also manages the private keys. So the biggest issue that you have with buying and selling electricity out of wholesale markets is you really have 2 choices. You can predictively buy your energy in what we call a day-ahead market, which is usually going to be at a cheaper, less volatile rate, or you can buy your energy instantaneously out of what we call the real-time market, which is going to be subject to higher prices and higher volatility. So if you're a customer and if you're an REP, you want to figure out how to buy your energy ahead of time. But to do that, you have to be able to predict what your usage is going to be tomorrow. And so that's what the smart energy agent does for the customer. It learns from data that the customer provides it via the smartphone app. That can be GPS data, that can be calendar data, but also data that it derives from the smart meter. So if the smart energy agent can read the smart meter every minute, we can actually figure out, it can figure out when you're using certain appliances, and it can learn your habits to understand when and how it should buy electricity for your future use. And then in doing that, it can actually further lower the cost of your electricity. The other thing that the smart energy agent is doing is that it's allowing you to use a cryptocurrency in a secure, always online environment. So you hook this thing up, you're going to load it up with a cryptocurrency. It could be Ethereum, it could be Bitcoin, it could be what we call the Bolt. And the agent will sign transactions every 15 minutes, essentially paying for the electricity that they used in the previous 15 minutes. But the question then is, if I'm putting a device always online, it's always going to have this key, I'm going to have a very high sort of attack surface area in terms of both software as well as a physical attack surface area. And so how do we mitigate that such that we can use cryptocurrencies in this environment in a secure way with sort of these naive consumers? And what we introduce is something called 2 of 3 blind key multi-signature security. So is anybody familiar with BitGo? Couple people. So BitGo is an implementation of 2 of 3 multi-signature, which means it's a wallet that needs 2 signatures from 3 keys that exist to actually sign and send a transaction. So what that allows you to do is it allows you to break up the points of failure in the system or the points of attack in the system. So the way that works with BitGo is that the customer would typically have control of 2 keys, and one of the keys would then be with BitGo. And if the customer wants to create a transaction, they start it on their smartphone, they send it to BitGo, BitGo co-signs and then sends it to the blockchain. There's an issue with this system, and the issue is that the customer is going to likely have 2 plain text backup keys in their possession. So one, they have to essentially be aware of cryptocurrencies now, and they have to securely store these backup keys in plain text, which comes down to essentially an issue of physical security. So how do we eliminate that, which we need to do to be able to allow, again, the naive consumer to use these things? So what we introduce is something called a blind key, and that blind key is on the agent, and the reason we call it a blind key is because the customer doesn't actually have a backup of it, and they couldn't actually figure out what that key is even if they wanted to. So even if you have the agent, you can't get the key off of it. So in this system, the customer still has possession of 2 keys, but the only way they can use the second key is if they physically have the agent and they can pin in and use a second factor physical confirmation that they're making a transaction. So in this system, you've actually eliminated this issue of the customers having to know or be sort of aware of their backups, and you've eliminated the situation where they have these plain text backups in their possession that, say, a thief could potentially want to come and take. So the other thing that we introduced with the agent to kind of achieve the security level is something called a secure computing environment and a secure enclave. So the secure signing enclave is where the keys are actually created and stored. So when you create a message, you sign a message, the message becomes fungible once it gets signed with the keys. And that happens in this secure enclave. The secure enclave is essentially a bank-grade security device. So it's the same sort of chip that you would see in a bank card or a SIM card on a phone. And in between this secure signing enclave, we have something called the secure computing environment. And in the secure computing environment, we essentially introduce account permissioning and whitelisting. So if I think about this 2 of 3 key blind key topology, and I'm an attacker, if I want to go and get your money, I have to physically break into your house. I have to get, say, your smartphone, your smart agent, but I also have to get at least 1 PIN from you. So there's this physical coercion that still potentially exists if, say, I'm a customer and I have thousands or tens of thousands of dollars on device. An attacker would know about this, come in, and then, if you've heard of the $5 wrench attack, coerce the PIN out of me and then steal my money. But if you implement address whitelisting, meaning when you set the account up, you say, these are the addresses that I can send money to, and you implement time-based account withdrawal limits, you end up in a situation that's similar to an ATM card. With an ATM card, you walk around on the street all the time, but nobody ever comes up to you, tries to steal your ATM card, coerce a PIN out of you, and take money because you have a withdrawal limit, right? So it's, say, $500, and that $500 isn't worth the attacker's time or risk to actually go through that process to get the money from you. So with the smart agent, with the 2 of 3 blind key multi-signature security, with account permissioning and whitelisting, we've essentially achieved a system that's as good as the risks associated with an ATM card. So the other thing that we're introducing is something called the Bolt. So the Bolt is a USD stable token, and the reason for the Bolt is that it allows us to still have a blockchain-based cryptocurrency system. But if a customer doesn't want to know about cryptocurrencies, doesn't want to be exposed to the Forex risk associated with cryptocurrencies, we can use the Bolt in place of, say, Ethereum. And all that is an ERC-20. It's backed by cash. So we create a Bolt when a customer makes a deposit. We destroy a Bolt when a customer redeems that for an electricity sale. So they're always 100% backed. But that allows us to hit a much broader audience. This part I'll skip for now. No, there's one thing here. So no, I'll skip that one. I'm running out of time. Yeah, so I'll hit this one. So the secondary benefits of the smart energy agent, it's actually kind of interesting. Up to this point, you haven't had a situation where, one, you've made a system that's essentially turnkey security for a naive user. Number two is you haven't had a situation where you can have online access to funds. So that actually creates a number of benefits for the users that we haven't previously been able to achieve. The first one being is this isn't just a smart energy gateway that allows real-time payments of electricity. You can actually think about this as a smart or a crypto-enabled gateway for all IoT devices. So energy is just one application within the IoT space, but as we move forward, we're going to be creating an API that will allow other devices to set up very simple authentication, say using an RSA signature between just a normal IoT device and the gateway to be able to sign and send transactions. There's also benefits to other distributed applications. Anybody familiar with IPFS? So IPFS, you could potentially upgrade your agent with a slightly larger smart card, SD card, and you could have that act as an IPFS node. You could add a little bit more memory, and that could be an Infura node. And you could also have it act as a Casper remote signing node. So I'm running out of time, but this is our team currently. It's expanding quickly, and you can find more information out on our website, gridplus.io. We are doing a token sale, which is actually on Monday. And we will be planning to start retail operations in Texas in Q1, Q2 of next year. So if you're interested, if you live in one of the deregulated markets in Texas and want to pay for your electricity in crypto, come see me at the booth, and I'll get your information so that when we roll out sales, we can contact you and start being a customer of Grid Plus.
Hey guys, we got about 5 minutes for some questions. We got some questions. Okay, and also food trucks are here, but don't leave until you answer your questions. So.
Is this going to be available in all markets, including co-op markets, the electrical co-ops that can be?
So the competitive markets of Texas.
So not co-op because it's kind of a monopoly in the
Correct.
area.
So
okay.
you have co-ops and MOUs. Those are not competitive. 85% of the households in Texas have access to competitive.
What is the token sale about? What are you selling, basically?
Yeah, so we're selling something called a grid token, and the grid token you can think of as essentially a software license, which will give you sort of preferential access to rates if you become a Grid Plus customer. So you'll be able to redeem it for 500 kilowatt hours of energy, essentially at cost to Grid Plus. So we won't mark up that energy at all.
Do you have any plans in your roadmap to expand beyond the U.S.?
So we actually have a memorandum of understanding with TEPCO. TEPCO is Japan's largest electrical utility. One of our advisors is the Chief Innovation Officer of TEPCO. We're hoping that next year, if everything goes well, we can potentially work out a licensing arrangement to make that a product offering in Japan.
So for the grid tokens, say you don't actually get it installed, but you wanted to get the tokens, are they tradable to someone who has them, or are they locked to you?
So they're an ERC20 token, so that they're a crypto asset, right?
And then for the data, with regard to the smart meter and how that can play into lowering fees and stuff, are the individuals actually going to have ownership or control over that data?
Yes.
Okay.
So all of the data that's fed into the agent exists on the agent. So the agent is where the AI is. It's not like off in some cloud. So whatever data you're sharing it with the little box that's sitting on your desk at home. You're not sharing it with us.
If I'm a customer, can I hedge?
The hedging that essentially is available as a customer is between these day-ahead markets and these real-time markets. If you look at what the grid token is, that's also potentially a mechanism for hedging. We won't have sort of blanket open sort of hedging things. initially, but if we can work it out technologically as well as a regulatory standpoint, we would look at that.
I mean, just as a follow-up, you know, when you look at what happened in 2000, 2001, when the unregulated markets went through basically a crisis, you know, how do you avoid that kind of situation?
Yeah, so if you look at the incentives for all of the actors on the grid, you're actually incentivizing them to act in an economically rational way. And that economically rational way within the market structure that exists would cause the grid to become more efficient, more reliable, cheaper, higher utilization. So
I think we got time for one more question. Does anybody else have anything? No? Okay, well, put your hands together. Thank you.